Welcome to the Depth Dive. Today, we're diving into the world of Bitcoin trading. Well, not just the basics. You've sent us some interesting stuff, an article and notes from a video, Trading One. Seems like you want to know more than just Bitcoin is going up. You want to know the how and why, am I right?
Absolutely.
Yeah.
That's where technical analysis comes in, right? It's like we're trying to figure out where Bitcoin's price might go next.
Okay, so both the article and the video mention Bitcoin kind of being stuck, this whole sideways movement thing for over 200 days. What's that all about?
Yeah, so picture Bitcoin's price. Like, imagine a car stuck in first gear. It's revving up, but not actually going anywhere.
Okay, I'm picturing it. So where is it going to go, up or down?
Well, that's the big question. And this is
Yeah.
where that 73.5K resistance level from the article comes in. Think of it like a wall in Bitcoin's path.
So if it breaks through that, then what? We could see a massive surge.
Exactly. All the traders are glued to that number, trying to guess what happens next.
So how do we even begin to read the market? This is where those indicators from the article come in, right?
Yeah, they're like clues. Let's start with the two basic types, momentum and trend indicators. Momentum is like, say, your speedometer.
Gotcha. So if momentum is high, Bitcoin's about to take off.
Not necessarily. It can mean things are getting a little overheated, too.
Like a rocket burning through fuel too fast. And what about trend indicators? Those are about looking at the bigger picture, right?
More like following a trail, seeing which way Bitcoin's been heading, uphill for a bull market, downhill for a bear market.
Okay, so we're looking for signs that this sideways thing might be ending.
Mhm.
Then my notes get really wild. The Trading One video mentioned using like 250 custom indicators. Is that even possible?
It sounds crazy, but it shows how technical analysis is really personal. Some traders like things simple, others.
Right, they go all out. But before we get lost in all the indicators, let's talk about something the video really stressed: managing risk.
Yeah, that's crucial. The presenter actually shared their own experience with stop-loss orders, which are
Was
basically
it safety nets? So you don't lose everything if a trade goes bad.
exactly. It helps you stay calm when things get crazy, especially with how unpredictable crypto can be. But let's dive into these indicators a bit more. Understanding them seems key to making sense of everything. Where do we even start? Well, the article mentioned something called support and resistance indicators. They're like, lines you see on a price chart.
Right, not just that 73.5K level, but others too. What makes them so important?
Think of them like psychological barriers almost. Support's where the price tends to bounce back up from.
Like a floor.
Exactly. And resistance is the opposite. The price struggles to break through, like a ceiling.
Okay, so traders use these levels to figure out when to buy or sell.
Yeah, it's all about spotting those historical patterns. But let's get back to momentum indicators for a sec. How do we know a big move is coming, not just a temporary thing?
Right, we were talking about that. Like, how do you tell if it's sustainable?
Exactly. It's like high momentum can be good, but is it going to last? Some indicators can actually show if something's overbought or oversold.
Ooh, warning signs. Okay, so that's momentum. What about those trend indicators? How do they fit in?
Those are like your compass. They tell you the overall direction of the market, bull market going up, bear market going down.
And they can help us spot when it's about to change direction, right?
Yeah, like if a trend indicator is saying things are up, but the price starts weakening, could be a sign of a reversal coming.
Wow, this is getting pretty complex. But with all these indicators, how do you know which ones to pay attention to?
That's the tricky part. It's not about following just one, but looking for patterns, those aha moments where things click.
So you're putting together clues from different indicators.
Exactly. Like, say, one indicator says it's overbought, but another shows the trend weakening. That's a pretty strong signal.
Okay, so it's about the bigger picture. But before we go too deep, let's circle back to that idea of managing risk. So we don't get ahead of ourselves. It's easy to get caught up in all this, right? But we can't forget about managing risk.
Oh, absolutely. It's like you wouldn't just run a marathon without training, right?
Mm.
Same with trading. Got to manage that risk.
And the Trading One video really emphasized that. The presenter talked about these stop-loss orders. What are those again?
Think of it as setting a limit. Like, if the price drops below this point, sell automatically so you don't lose more than you're willing to.
A safety net. So you don't panic and make a bad decision.
Yeah, exactly. Especially with crypto, things move fast. You got to be prepared.
Okay, so stop-loss orders, got it. What else should we be thinking about when it comes to risk?
Having a plan is key. Before you even buy, know your exit strategy, how much you're willing to risk, what your goals are.
So don't just jump in blindly, hoping for the best.
Right. Technical analysis is a tool. It's not magic. There's always going to be some uncertainty.
Lots to learn, that's for sure. As we wrap up this deep dive into Bitcoin trading, what's the one thing you hope our listener takes away?
Don't be scared to dig in and experiment. Technical analysis might seem intimidating, but it's about spotting patterns, managing risk, and figuring out what works for you.
Awesome advice. So, to our listener out there, we've just scratched the surface of technical analysis and Bitcoin trading. Remember, this is just the beginning. Keep learning, keep experimenting, and hey, maybe you'll be the expert giving us the insights someday. Until next time, keep those brains engaged, and we'll see you on the next deep dive.
Hello, can you hear me?
Hello.
Hello,
Yeah, I can hear you. How are you doing?
I'm great, thanks. And you?
Yeah, I'm doing pretty well. Thanks for asking.
Okay, so this is the first time we meet, and as I told you, I would like to take a look at a couple of charts and just
Sure,
talk
sure.
talk through them, and you can what I'm interested in is just that you try to understand them, and from
Mm-hmm.
time to time you ask me a couple of questions. Um,
Sure.
so if you are ready, we can start right away, or if you have something you want to talk through before that, we can do that also. I'll let you decide.
I'm ready. No, that's not the issue. I'm ready with your chart.
Okay, so I'll share the screen and you can take a look.
Sure. Okay.
Okay, that's the first chart I want us to look at, and I'm starting with this one. It's on Bitcoin 1 week chart, and I'm
Uh,
start.
can Sorry to interrupt you. Can you turn off the video because your video is lagging behind?
Okay, I'll try to do that. Give me a second.
Okay.
So now I want to take a look at this one because it's the Bitcoin 1 week chart, and
Okay.
we can see the major issue we are facing right now. So as you can see, all those lines above are heavy resistance, and it is quite
Okay.
hard for Bitcoin to break that resistance.
Okay.
So that will be quite tough, and I have a lot of more charts we can look at today. We do as many as we can during the time that we have, and
No
the thing
problem.
is just that it won't be easy to get through this resistance. And what we need to know to get some confidence that the bull market is still on its way and will continue is that the one candle closes above that resistance, above the last line. Those three lines are all
Okay.
resistance, but the last one is the most important one. So above 73.588, if we can
Mm-hmm.
close above that, and that would be nice if we can close a candle above that. The body of the candle, like here, the top is at now at 68,
Mm-hmm.
233. If we can have that like at 80 and close above, that would be great. And
Sure.
even better than that would be an entire candle above that resistance. Because if we just break the resistance and then fall down, it would be a fake out. But until
Mm-hmm.
now, it looks possible, but it's also heavy resistance. That's the only thing I wanted to show with that chart especially. Also, we can look at the, I'll let you talk about that if you want, and if not, I keep on talking.
Let me just make me understand. what indicators you have applied, and what are the uses of it, why you have applied.
Well, this indicator, I just use it because I think it's a good indicator for support and resistance. And the other ones are trending indicators, which show you when this one is green, it shows you a bull trend. When it's red, it shows you a bearish trend. So this indicator didn't turn until now, but we are above the balloon line right now, so
Mhm.
it will start turning. But I think it's a little lagging on the indicator because here it took a long time until it changed. But
Yes.
and more important are the other indicators below. For example, this one gives you
Mhm.
a green trend when we start being bullish, and he's bullish since this candle, which is not too bad. This candle, but it's not the most aggressive indicator I have. But the thing is just I only use the main thing I want with this chart is just to get across the message that we have heavy resistance, and right now we are actually battling with that resistance because we are trying to go
Okay.
through that resistance, but we haven't made it. And we will talk more about this. This is important if we look at the next indicators. It will be an important message. The thing is, I look at. I chose between 250 indicators. I chose a couple of one that I find interesting to talk about today. But I actually have chosen 350 indicators, and I even have made them more custom for my needs. So I made them more aggressive or less aggressive according to my needs by changing the parameters. But this is just one that gives me that shows very clearly the resistance we have above us,
Okay.
which is dangerous because maybe we won't even make it through that resistance, and other indicators point in that direction that we can't make it through. So it is not certain that we will break that resistance. That's just my message.
uh so basically, like, your how can you make use of those resistance? What are you willing to do at this point of time? Like, you
Well,
are going to wait for the breakout?
no. Well, that would be one strategy you're talking about. Yes, there are people who will do that. For me, well, this is actually a very tough period, the last 200 days we had, because of the sideways movement. But I had some indicators giving me a low around here where I'm pointing right now. And I took a
Mm-hmm.
long position that was quite nice, but then I was kicked out, probably without any real gains. Without any real gains, I was kicked out break even. Here also had a couple of indicators told me to go long, and again we then went lower. But I don't think this time I was broke out. I was well, maybe again here I don't remember exactly because I take a lot of positions and I don't remember each one in the past. But maybe I took one and I was again stopped out at break even, and now I had the third one, and to this resistance my break even did not count. But I had at least 3 times I took a signal to go long. So I'm right now already in a position, and the only thing I have to ask myself is if I keep the position as I would like to, because I think the probability is quite good that we go through the resistance and even higher, or if I already take the gains I have right now on the table. But right now the position is still open, and I'm still
Yeah.
going for the breakout. But the thing is, if it turns against me, it will just be and I do nothing and I don't exit before that, because maybe I exit, since even that level I would still be in and would still have some gains at 48,970. But the thing is, I just the question is not. I just want to talk through those indicators I show you are part of the puzzle, but they're not the total answer. I mean, I look at my 250 indicators, and some of them I follow them every day, others just from time to time. But the thing is just that the things we show today are not the entire answer to the question what to do in the market. They are just indication. They're just pieces of the puzzle. But you can form your opinion and take then more educated guess and a more educated position. And we are just talking about probabilities. So there's no certainty that we break through those resistance and go higher. But there's no certainty right now also that we break support. You see that line here at 48,852? That is our support right now. Okay, and there's no certainty that we will break through that support. But the thing is, just Bitcoin is already for 200 days sideways, and it cannot maintain that. It is impossible. It's a fact of life. It is impossible for Bitcoin to maintain such a sideways action for even longer. So it will break out. Either we manage to break through and go higher, the bull market keeps on going, or we break support and the bull market is over and we go into a bear market. Okay, but we cannot stay at that level. It's the same thing like with fear. We were nearly also 200 days in a sideways action most of the time. And then we broke out and had a very nice uptrend. So I just want to go through it and have your feedback. My positions are already taken, and I know when to take more positions. I'm not asking for you to tell me exactly when to go in, but I'm interested in your opinion. For example, would you try to wait that sideways action, or would you wait until we get a breakout over resistance? What would you do?
All right. So for answering these, I want to share my screen so that I will make you understand my opinion.
Can you not put it closer? Because if we do that, the thing is just it will take quite some time, and I have a lot more charts that I would like to look at. Can you not just resume your opinion and we share your screen another time? Because today I would actually like to go through a couple of charts that I have, and we can do that next time. You can share screen and tell me that in more detail. It's just if we do that, I think it will take at least 15 minutes, and we don't have much time left.
Okay, no problem. So basically, in my opinion, what I feel is, yes, Bitcoin is probably going to cross the resistance, and it is going to break out the weekly resistance as well. And 100,000 is also on the cards for the Bitcoin. So basically, I have also taken a long position in the Bitcoin, and it was probably somewhere around the second support. Are you
This here.
able to see
Here. This
this?
one?
Yes.
Yep.
Just above the closing of this.
Okay.
Above the closing. So let me see the closing. Closing of this candle. That is high. Closing. Closing of the, yes. 58,000 approx. I have entered my Bitcoin position somewhere around 57,000 or 58,000. So I'm also long in the Bitcoin at this point of time.
Okay, great. Nice to know. Now we have talked more than enough about that chart, and I have a lot of other charts I want to talk about. So I tell you the issue we're facing right now, and I want to illustrate that, to show this indicator, the first one. We don't have to talk too much about the other ones. I use them because they help me, but I want to talk about this indicator, and it gives me momentum. So you see, it goes up to blue, from gray to yellow, and then blue, and then afterwards it would go to green. Okay, and it shows you just that there's momentum in the chart. As long as we stay green, there is momentum, but as soon as we break the momentum, you have to prepare for some bad times coming. Either we start straight away a bear market, or at least a sideways action, like here. Once the momentum was gone, here, it took a very long time to recover and get some new momentum going. And now we are facing the same. The momentum was sucked out of the market on this candle, and we still have a lot of work to do before even going yellow or blue. So because now we are still very down from the momentum point of view. It just, when I saw that, I knew that it wasn't that the correction we were in would not be short or short-lived. Well, and I took a long position here, and even if I didn't lose any money, maybe I shouldn't have done that by looking at this chart, because the thing is just the momentum was not in, so it was not very likely that we could straight away go to new highs, because normally when the momentum is out, it is really difficult. Here the momentum was out, we still went a little higher, but as you see, it wasn't the end of the correction. We then went lower again. It's just a way to see that it is gone, and it's the same in the other way around. When we're in a bear market and we go lower, as long as the momentum stays up, it isn't over. The bear market really stops on this candle. And that's a good moment to say. It's a very aggressive moment to say this candle, because it was actually before the big breakout candle. But when that broke, you know that the momentum to the downside was over. That's just what I want to highlight with this. And now I actually would like to jump straight away to the next chart, if you don't have any comments on this. Because the two charts I show you right now are just telling you the difficulties we are facing, and since when I know that we are facing those difficulties.
Okay, so basically I don't have anything to comment on this, because I have to backtest this indicator a lot in order to give a comment on this one.
Okay, well, maybe we do that in the future. We can backtest, but today let's try to go through some charts. I think that would be more interesting. Okay, another day we can backtest this indicator. And here is also an indicator that showed me. Now we have it on the 2 week and the 1 week. On top is the 2 week, and on the bottom is the 1 week. And as you can see, when we get a cross, it actually is a very bad sign, because it says a lot of. It might be the end already of the bull market when you get the cross. For example, if you look at the 2 week chart, once we started getting crosses here, we were close to the top and we didn't go any higher. Okay, Bitcoin didn't manage to go any higher. And if I can go here again, when we did get a cross here, it was a very bad sign, because then we had the breakdown, even the COVID crash. But it was in the card already here once we got the cross. So these crosses should not be taken too lightly. And here again, when you certainly did get a cross, the bull market was over. Okay, and we entered a bear market phase. So in January, those crosses are quite decisive. So when they happen, you should not take it too lightly, okay? And this time, can it be different? Can we go higher? Even though we had a cross, well, that is not certain, because the crosses are actually a very... I have to give weight to it, because every time it happened in the past, the bull market was close to over. Here we had a couple of crosses and we went still a little higher, but not much. You know, the real bull market was over. So now again we have a lot of those crosses, and it just shows that it won't be an easy task to go higher. So I still think we can manage it, but it won't be an easy task to go higher. And if we don't, well, we had the message. The problem with that indicator is that it might repaint a little. So if we go higher, maybe a couple of those crosses will disappear. So that's the issue. I tested it on a smaller time frame, and sometimes I think it repaints. Not all the time, but sometimes I think it repaints. So we have to be a little skeptical about that indicator.
Okay, so is it a lagging indicator or a leading indicator?
Well, a lot of times it is a leading indicator. For example, here, when we got the cross, it was the top. The first cross, it was the top. So it was a leading indicator. Here it was a little lagging. But before that, here again, it was a leading indicator. It did give you one candle after the top. It give you a cross. Here it give you a cross the top, I think, or very close to the top. So it is an aggressive indicator.
Okay.
But it might
And what
repaint a little. It might repaint a
and
little.
what and what kind of trading do you prefer? Like, are you a swing trader or positional trader, or what kind of trading do you prefer? Like, you are using only weekly charts.
Yeah, right now today we only will look at the weekly charts, but once we can also look something on a smaller time frame like the 50-minute chart. But right now I'm just looking at the weekly chart. I think just it is easier to make money on the bigger time frame than the smaller time frame. Day trading
Exactly.
is really hard. Now I do day trade and I test a lot of indicators and strategies on the 50-minute chart, but it is really hard to make real gains on the small time frames. So you can survive, but it's not an easy task. So
I
I
feel the
think
same.
it is easier to make money on the bigger time frame just because the signals you will get have much more weight on the bigger time frame, and they're much lighter. They're nearly insignificant on the smaller time frame. For example, if you have an RSI cross at a low level, and you expect it now to go higher, it might not really react to it. But on the weekly time frame, if you get the right RSI cross, it might announce a real trend if it's not a fake out cross. So it's just that even if I use a smaller time frame, I will still base a lot of my decisions and my bias, if I'm more bullish or more bearish, on the higher time frame. So the higher time frame is the more important chart to talk about because
Exactly. That's what I feel the same. So, if you enter on the weekly time frame, how much time do you wait for the price to, like, close your position?
Okay, sometimes I have a take profit, and other times I wait until my indicators tell me to exit. So there are a couple of
So,
indicators, and I will wait for a signal to exit. So either I have
so basically, it's a weekly time frame. So I think you have to wait at least a month, or like quarterly, like 3 months, 6 months at least, to close your position, because it's a weekly time frame. The one candle is going to be made in a week, so most probably it's not easy to close your position in a it is going to probably take at least a month, right?
yeah, I understand. I have to give it more time, but um, well, yeah, it makes sense. It's just that I cannot. I don't think you should say I wait 6 months until I take. If I want, I exit now and I have already some nice profit. It's just it would be a pity if we break resistance and go higher. That's the only thing. So the thing is, yeah, you have to give it time. Of course, when you're on the weekly time frame, you have to give it more time. Yes, that's a fact.
So usually, how many days or weeks you wait to take profits?
I don't have a number for that. It really depends. For example, here, um, there are some indicators who gave me a long position on that candle. Well, here I would have waited until I get the first cross here to exit. So I don't know how much time that is, but that would
It's
be,
basically 4 weeks. It's basically 3 to 4 months.
yeah, probably, yeah.
Yeah, that's
But
what I was willing to say.
that's this in this scenario. But there might be other scenarios where it's different. But in this scenario, that's what I would have done.
Okay, switch back to the next chart.
Okay. Now, here I want to show this. It's a MACD. And as you can see, we are forming higher highs and higher lows, which is the sign of a new uptrend.
Uptrend.
Yeah.
Yes.
And I like to see that. So I just wanted to point it out.
Okay.
On this candle, what was I looking for? Well, I want to look at this indicator. And it gives some trend lines and probably some divergence. Yes, exactly. And here we had a strong divergence, as you say. And it gave you a perfect moment to enter for the bull market. And now, again, we are facing the same divergence. If it's a divergence, I'm not sure if in this case it's a divergence, but we are facing the same signal. And so it could be strong also. Probably not as strong as this one, because this one was on a longer time frame. It took longer to form. And this one is on a shorter time frame. But yeah, it's a divergence because this candle did close higher and this candle did close lower. Okay, so it's a divergence because the candle did close here. We did close lower, but on the indicator we did close higher. So it's a divergence. So it's just a nice thing to see. And also, if you look at the chart below, as long as it's green, it's in a bull trend, and when it's red, it's in a bear trend. And here also you see the bullish divergence. The second indicator, the last indicator down here, gives us only one bullish divergence. For the small one here, he doesn't think it's noticeable, so he won't show it. But the one we had at the bottom of our last bear market was a very, very strong signal because it was confirmed on here at least two indicators, and have more indicators who confirmed it at around that time. So it's just to say, but when you look at the bull market, we had one correction here, red candle, one correction here, so two, and here a third correction. And now again we are facing a green candle. Now last time when we switched from red to green, we had a very nice uptrend. So this time, again, we switch from red to green. And if it's not a fake out, well, then the bull market will continue. And here also, when you switch from red to green, we had a small uptrend. Not really much because we started a sideways action. But we during the most of the time of the sideways action, we stayed in a bullish trend since we only had green bars forming.
This one is a MACD.
Sorry?
This one is a MACD indicator.
The last one, what kind of indicator it is you're asking, or the second one?
Yeah,
or the middle one?
The last one is MACD, right?
I would have to check that. I can tell you next time. I'm not sure if it's MACD. It might be, yeah. They might be MACD, based on MACD or something like this. I'm not sure on what they are based, but on a classical indicator like MACD, RSI, or OBV, something like this, yeah.
Okay, no problem.
Okay, we are making progress. Yeah, what?
I mean, I don't have anything to comment on this one, so we can probably switch to the next one as well.
Okay, great. Now, here we see one indicator that I want to show that went crazy, and it's a little funny. So it gives you buy and sell signals. And sometimes they're in a row, like here. You had a sell signal, buy signal, sell signal. But here we had a signal on the top, and then there was a heavy crash, okay? But now we have something that never happened in the history of Bitcoin, that we have buy and sell signal one after the next. So the indicator went quite crazy and gave me something that he never did, because this was really tough for him to see if we are bullish or bearish. But he gave you like 1, 2, 3, 4, 5, 6, 7, 8, 9 Nine
The
times
indicator is confused. The indicator
he
is confused itself.
yeah, the indicator is confused. Exactly. I just found it funny. That's why I wanted to show it to you. And it never happened. I checked. I checked it. It never happened that much time in a row. And on nearly every second candle, it changed his opinion. So there were not even 2 candles in a row that he stayed bearish or bullish. He always changed his opinion. As you say, he was confused.
Okay, this one is a hypocrite.
And now you see, here I want to show the indication of a reversal with that indicator. So we had a reversal here, and it was a good time actually to sell. The last time we had a reversal, and now again we have a reversal. And today the candle will close since we are on Sunday. So there's a low chance that it will turn, that the reversal will fade away before the close, because we don't have much hours left until the candle close, only 10 hours. So the thing is just that we have to be a little careful, because when we get those reversals, they can be meaningful. Here up here also we had a reversal and we started a bearish trend. Here we had a reversal and the bearish trend was for a moment stopped since we went higher. Okay, here this one was totally fake, but here again, is it a B or E or R? Here I'm not sure if it's a B or R, but it might be an R reversal indicator. So just, and if you look in the past, well, here it was meaningless. So this one was meaningless and this one was meaningless. So sometimes it doesn't work. So we cannot be 100% certain, but if this indicator is right, we don't go higher. We won't make it through the resistance. It's just something to be aware that not everything is nice and good. And also look at the higher highs we make and the lower highs. Okay, as long as we make higher highs, we are definitely in a bull market. But here we started making a low high and lower lows. Yeah, and again a low high and a lower low. And right now we haven't managed to make a higher high, so we are still in the low highs and lower lows type. So this is still not great. Huh? You want to see the higher highs and lower highs and not the opposites. So this is also to be aware.
Okay, this can probably be a downtrend continuation.
Exactly.
So we have to be.
If we don't manage to go through the reversal, then there's is a high chance we start a downtrend continuation, because that doesn't happen often. That we get lower highs. If I go, for example, in the last bear market, yes, we did it at the beginning with the COVID crash. We made a lower high and a lower low. Okay, but okay, now I have to refresh my chart to show the rest. But in the other bull markets, you can take my word for it. I don't want to refresh my chart. In the other bull market we had, the 2 other ones, there were no lower highs and lower lows. There were only higher highs and higher lows. So it's just something to be aware. It's not great to make lower highs, and we are still in that formation right now.
Okay, so basically this indicator is showing us to be cautious about our position.
Yeah, to be cautious. Yeah. And if there's somebody who is more bearish because he doesn't think we can master higher highs, because of some reason he doesn't believe we can go through the resistance, then now would be a good moment to exit, since we get the reversal indication of that
profits.
Of that indicator. So that, but it's just sometimes it is wrong. So I think there's at least a 50% chance that it is wrong. So we cannot
We cannot solely rely on this indicator.
Yeah, exactly. That's what I mean. Exactly. Perfect way of saying it. Okay, here we have also a trend indicator with bullish and bearish phases. Here we started a bearish phase and now we again bullish. Also, if we look at the same indicator that we have three times but on different time frames, we see that on the smallest time frame we went bullish quite soon. Okay. And the second one also, we went bullish quite soon. And on the higher time frame, we only went bullish now. But look, the last time on the higher time frame we went bullish, the bull market kept on going for a long time. And here also, when we went bullish on the highest time frame, even on the lowest time frame, we had a signal here. Then there was nothing in between, and then again a confirmation. So even on the highest time frame, when we got a bullish indication, it lasted a long time. So the last times we got a bullish indication, it was quite important. Here we got a bullish indication, but it was in a bear market, so you shouldn't rely on it. You should only exit your short position and then take it again once the bullish trend is over. The blue is when we change from bearish to bullish. And here again we had blue down here, but as you see with the lower time frames, it gives you earlier the signal that a bullish trend starts. So we don't have to look too much into it, but it clearly could be a good sign if we manage to keep on printing
the green signals.
Green signals, yeah. If we manage to keep on printing green signals, it would be great. Here we had a hesitation since we got a blue signal, which could be an easy hesitation, but then again we got a confirmation of a green signal. So as long as we stay green, if we see red candles forming, then we must be careful, especially if it's on the highest time frame, the first one. The second time frame, we also should be careful, and the third time frame, well, this one is on a very lower time frame, so it's not as important, but we also should be careful. But as long as we only see green or even blue, we have the great line. If we see blue, we can think about taking profits, but as long as we see only green, we have the good green lights to keep our position.
What is the name of this one indicator?
The thing is, I don't want to reveal all my indicators because I have, it took me a lot of work to get them to customize them to my needs. So normally I'm a trader and I'm also a financial advisor for some of my friends. And I give it to them if they are my clients. But normally, if not, I keep my trading secrets for myself.
No problem. I don't actually rely on indicators, but I just wanted to understand about it.
Yeah, I understand. It's a normal question. Thanks for asking. Now, why do I have this indicator on? Let me think. Well, it just, if you want to see how I managed to take a couple of long positions during the correction we had, and this indicator helped a lot, the triangle indicator. And because it is quite performant to take long or short positions. For example, here you could have taken even in a bear market a short position and price went low, or at least you could have exited your long position with the triangle. And here it gave you a couple of times a triangle and price went higher, and a triangle and price went higher, and a triangle and price went higher. So that was a great indicator for going long. And here also a triangle and we went higher. So this indicator, the triangle appear quite soon, and normally they have some weight. For example, here you had two of them in a row, and then we had a nice pump. And here again you had a triangle here, and we went higher. So when I see that triangle, I might consider taking a position to go long. That's just one of the secrets I used to enter quite aggressively the market, but also I take a very small, very short stop loss, and sometimes I get kicked out 3, 4, 5 times in a row until I have a position that holds for a long time. So it's not just because I did get, for example, here. Well, we went higher. I was in profits, but then we went also lower, and my stop loss at break even was hit. And here the same thing happened a second time. It's only now that the third time that my position is still opened, and I'm still keeping it for now. Here also you see the same resistance as we saw on the first chart at that level. Again, the blue line gives you the resistance.
Resistance.
Yeah. Okay. This we have already seen. Now this one, why did I show it? Let me think. Why do I have this?
Okay.
Well, I don't actually know why I have this indicator on. Why I selected it. Here we have the resistance again, and probably the most interesting is the blue triangle, which gave you twice an indication to go long. So that's quite nice. But I don't remember exactly why I have this, why I showed this this chart. So let's just jump. Actually, I didn't want to show this chart. I want to show this one. Sorry, I was on the wrong chart. Okay, on this here. Well, here again, you see the resistance with the blue line. And we have a trend line, which is green, and it goes violet. How do you call this? Violet?
Violet. Yeah.
Violet. It goes violet when we are in a bear market, but right now we are still bullish. And probably the most important signal maybe is this one we have here. Because the last time I think it happened, well, here it also happened. Yeah, well, let me show you better. Okay, here you have the yellow dot and the green triangle below. And when that happened, we had a very nice uptrend that started. You see? And now again, we have the same yellow dot and the green triangle below it. So it might be good news.
Showing, okay.
It might be good news.
Showing the formation of an uptrend.
Yeah, it might be good news because the last time it happened, it was quite strong when it did. So it might show the start of an uptrend, yeah, as you say. So we have 2 more charts, but we can be very, very brief on them. Maybe we stop with this one because we are out of time. But here, I just want to show this indicator down here, which has a couple of colors. And right now we had that pink color. How would you call it?
Red.
Pink, yeah? Something like this. Well, the thing is, when we get in a bear market, it goes from green to blue and then to green again. Okay, and then you have gray, which is the continuation of the trend. The trend stops when it goes to pink. Okay, but pink is not normally the top of the bull market, because here we had last bull market we had pink and it was not the top. Then we had the violet. I don't know how you say it in English. Violet color, and only then
you can also say purple.
Yeah, purple. When you had the purple color, we touched the top. Here we went a little higher, but it was a double top, a double top, or from elite waves we can also explain it with maybe wave 5 or a B wave. But it's just that normally we get the purple. And if we don't get the purple, it is not the top. Here we get the violet color, but it was not the top. You see? Mm-hmm. And here again, here we get a couple of times because the bull market keep on going. But we did get a couple of times the violet. Okay, so as long as we didn't have the violet, I think we still are missing that for our bull market. It's only when we start seeing a lot of violet like here, then we can think about exiting. And the bull market is probably definitely over once the violet turns, the purple turns into violet and then gray. Then it's really over. But now we only have hit violet. We didn't hit the purple until now, and that makes me think that we have more room to the upside. So I don't think we hit the top of the bull market right now, because this might be nothing. It might be just what we had with COVID. A little, we went too high too fast, and then we had to correct. Here also we had the violet, but it was just because we went too high too fast and we corrected. And from a cyclical analysis, that makes a lot of sense, because this time also we went really high, really fast. If we look at the halvings, for example, normally we don't make new. At the halvings, we are not that high if we compare to past halvings. So this times in the cycle, we were higher than actually anticipated. And because of that, it turned purple, and we had to correct for a couple of months. But now we still can have a new uptrend and finally hit the purple, which we are missing until now. Any final thoughts? Because we are over with time, and I don't want to keep you in our meeting more than agreed. But do you have any final thoughts?
I think you are using a lot of indicators to basically. Can I comment on your indicator stuffs?
Sure.
Like, I mean, I couldn't get to understand that why we are going to use so much indicators on the same charts. Like, can't we like just follow the basics price actions, like in order to manage our risk?
Sure, of course you can. Look, I'm not saying that you have to trade like I do. That's not the point. Look, I know one trader. She's a woman that I follow on YouTube, and she's trading while being a full-time mom. And I think she never looks at any indicators. Or if she looks, she might look at one or two indicators, which I would never look at because they are really basic and very laggy. But she managed to trade without actually looking at a lot of indicators. Now, I like to look at a lot of indicators because I have
because
to
you want to add more confirmations.
I want confirmations, and I want, for me, an indicator is a part of the puzzle. And if I don't look at all those indicators every day, but for example, for our meeting today, I have selected a couple of ones that I find interesting, just to talk over. Okay. But the thing is, every day I only look at a couple of indicators, maybe 5, 10 or 15 indicators, but I don't look at that much indicators every day. But I think they give you a good feeling about the market. They complete, they make the picture more clear for me. It's my style of trading. And the woman trader that that I take a look sometimes at what she does, she nearly, most of 90% of the time, she only looks at a naked chart and she takes a position
Yeah,
on a naked chart. So that's fine. Everybody has his style of trading. As long as you make money,
yes, exactly.
everything is great. It's just my
Yeah,
style.
yeah. Yeah. So I think your style is amazing, but the most of the people won't be able to easily do with this style of trading because it's probably more complicated to understand all those stuffs as you have did to me. So basically, it's your brain that you are able to catch all those indicators and decode all those puzzles into the, like you said, it's more about like a puzzle to you. So you are able to solve that using the indicators. So it's not the cup of tea of every person, even if they are a very good trader.
Of course, there are a lot of different traders. The only thing is you have to be careful because a lot of traders go bust really soon. Do you know Willy Woo? Have you already heard about Willy Woo or watched one of his videos? He was quite famous.
I don't usually follow any traders or anyone. So
Well,
because I'm
just to close the discussion. Willy Woo was very famous. He was on all the talk shows, and everybody loved him. And they loved him that much that he opened a hedge fund,
okay,
and they gave him 500 million to trade, around 500 millions. So he did put all his money into that hedge fund and all the money of his client into that hedge fund. And he was trading I think maybe exclusively Bitcoin. But the thing is, and he was a really, really good trader. He did on-chain analytics. So on-chain analytics are not the kind of indicators that I show you, which are based on volume and price action. They are based on the blockchain. Okay, on-chain analytics are placed on the blockchain, and he's a very good analyst. I really like listening to him. Everybody does, but it took less than 6 months for him to lose all the 500 millions, and he's a good analyst, one of the best. So just trading is a very tough business, and you must be very careful about what you do, and have and managed not to go bankrupt. And Willy Woo, one of the best, did go bankrupt in like 5 months and lose 500 millions. So that's a very bad result, and that's what happens to the best of us. I'm also a poker player, and the same thing in trading happens like in poker. It's a very humbling game. So you might think you're a genius because you just made a lot of money, but it is just as easy to lose everything. So and you have to
yes.
be careful. Okay.
What I feel about this one is making more money is not that great achievement. Saving your money from trading is a great achievement. That's what I feel. So basically, risk management is the key in successful trading. As long as you are able to manage your risk properly, and you are not going to be bankrupted, that's what trading actually is.
Yeah, that's good advice. You have to live. You have to live and see another day, because if you lose all your capital and you cannot trade anymore, then it's game over.
Yeah,
Unless you have an uncle who is very rich and gives you a couple of millions or a couple or 1K or 10K, or I don't know the capital you need to trade. But unless you have a very rich uncle or a family member who says no problem, I'll send you the money. If you go bankrupt and you lose all your capital, then it's game over. So you always have to be careful, and risk management, as you say, is really, really important. Since I'm a poker player, I like to compare it to poker. And once we can talk about how we manage a bankroll and the lessons we can take from it. But there are rules like the 1% rule: don't risk more than
yeah,
1% of your capital
that's
in
what I do.
trading. That's the kind of stuff traders talk about. I actually like also how poker player manage the risk, because why do I like poker? My real love is for trading, but why do I play poker? It's just because it is probabilities. It is probabilities, and you have to be very careful. I close with this. It is very rare when you are a poker player to get aces. I did get aces twice in a row, and normally you win easily with aces, but I managed to lose twice in a row with aces, twice in a row. Because even if when you have the best hands and the probability of winning is high, you can still lose. And the thing is, because even then you only have 80% chance of winning, but the villain, your adversary, the other people, they have 20% chance of winning, and that means that 1 out of 5 times they will win, and it can happen that you get 2 times aces and 2 times you lose. It's just something you have to understand, and it's the same thing with trading. You will have a lot of losing trades, and if you do it correctly, you will also have a lot of winning trades. The game is the same as in poker. You just have to manage to lose less money than you make. You have to make a little more money
And
than
gain more.
you
Gain more.
lose. You have to gain a little more. Yeah,
Lose less, gain more. So
exactly.
that's what basically is the risk to reward ratio. If you are going to lose, you are going to lose less. But if you are going to win, you are going to win more. That is a risk to reward ratio game in terms of trading, you can say. So
Yeah,
basically, what I focus on in my trading journey is the risk percentage which I followed on my capital, that is 1 to 2%. So even if I lose 10 straight trades, like 20 straight trades, but I still have 80% of my capital. So I'm not going to be bankrupted easily. And even if I win one, I'll be again in a good profits. So basically, my risk to reward ratio in any trade is probably 1 is to 5. If I lose one, no problem. But if I'm going to get, I'm going to get 5.
yeah.
That's what my risk to reward ratio is
I
when I
understand.
trade.
I understand. And that's, of course, nice to know. But you have to be careful with that. Because the thing is, you are setting yourself up to lose a lot of trades. If you do that on a day, as a day trader, and I test a lot of indicators as a day trader. If you do that on a time frame like the 50-minute chart or the 1
I
minute
don't do
chart,
intraday trading. I
yeah,
do take trades on the basis of
that
daily
yeah,
time frame.
okay, then there's more chance that you make it. But if you do it on a smaller time frame and you set yourself up with saying I lose 1 and I make 5, my risk to reward is 1 to 5, you will lose probably 80% of your trades. Okay,
Yeah, but
and that is just something from a psychological point of view, which is very hard for most of the traders to live through, because most of the decisions will be a loss, and it is really hard to keep on doing what you do when 80% of your loss, you get 80% of your loss. If you take, instead of 1 to 5, if you take 1 to 1.5, then you will have much less losses, because your
yeah,
winning trade doesn't have to move that much in your favor. It will be much more difficult to get a winning trade that moves 5 times in your favor on a small time frame than if it just have to move 1.5. The higher you put your, for example, if I'm willing to exit at 80k, my chance of making that trade is much higher than if I want to exit only at 120k, because the probability that it goes to 120k is lower than the probability that it goes to 80. It's just as high, the higher you want your risk reward to be, the more losing trades you will make. And that is really hard for most of the people. Even for me, there's a moment where I break. If I have 20 losing trades in a row, I will ask myself a lot of questions, and it will be hard to continue. Just a final thought. But I understand what you say. Yes, risk reward is really, really important. You're
I
correct on that.
use stop. I use stop loss trailing a lot. Basically, when my trade goes to 1 is to 2, I trail my stop losses. So basically, my trade is now on 1 is to 1. and I keep on like open my position. My trade still goes on, and my stop loss has been trailed to 1:1. So that's why I usually trades.
Yeah. Well, I don't know what your opinion is, but with the trade I have right now on Nvidia and Bitcoin, I should have also taken one on the S&P, but unfortunately I did not. But with both of those trades, I have a break-even stop loss. Now, if you trail, you have to be very careful because there will always be a little correction, like we see one here. You see where you get the sell signal and then you had a correction. And the thing is,
It's just like a retracement.
yeah, it's just a
I
retracement, and I don't know what you want, but actually, do you want your to be stopped out at this level on this candle, or do you want to keep the trade until the top here? So
Yeah,
if
until the top.
yeah, so you have to be careful to not put your trading stop too close because there will be
Yeah,
small retracement like here.
I don't exit on the retracement. After the retracement, I trail my stop loss to the last swing low. So basically, the swing low just you sold. After the retracement is done, my stop loss has been shifted to this swing low.
Okay, that's a great technique. Yeah, I like that. Okay, it was very nice talking to you about trading. Thanks for our lesson today. I think we did a lot, and we can. I would. It would be great if we could see each other in 1 week again. Is
Okay,
that
no
possible for
problem.
you? No
Yeah, it
problem.
would be
Okay.
possible the same time and the same day next week.
Yeah, that would be perfect. I'm putting it in my agenda, and I see you then. Thanks a lot. I enjoyed talking to you.
All right.
Bye bye.
All right. I also enjoyed talking to you. It was a pleasure meeting you. Thank you. And can I deliver the order now?
Uh, could you do it after the second meeting we have next
It
week?
was a 90 minutes meeting. Like
Oh
one
yeah.
hour is
Okay.
already.
Okay. Then go ahead. I'll approve it. No problem.
Okay. Okay. Thank you very much.
Bye.